Welcome, latest Motley Fool scoreboard. I'm Anand Chakpool, and we've got longtime fools Jason Hall and Rick Menares giving a 1 to 10 rating to the de facto table of contents for your million streaming services. It's Roku, ticker symbol ROKU. First, we'll rate the strength of the business, including factors like industry and competition, and there's a lot. A 10 is invincible, a 1 is hopeless. Rick's going with an 8, Jason's going with a 7. Rick's followed this stock forever. Let's start with him.
Yeah, so 85.5 million households are turning to Roku to turn their TVs into hubs of endless digital entertainment. They're engaged with the company behind the leading operating system for smart TVs, cradling the Roku remotes for an average of more than 4 hours a day. Despite pioneering a market that was eventually invaded by the killer A's of the Magnificent Seven, Apple, Amazon, and Alphabet, Roku commands streaming time in the US that is 3 times higher than its closest connected TV competitor. There's power in the button. There's a moat in the remote.
Well done there, Rick. I gave it a 7. And as much as I love Anthony Wood, I mean, this guy's created multiple categories in digital video. Roku is an incredibly strong brand, and it's increasingly doing a better job with monetization. And a lot of times competition is the lazy argument. So I don't want this to come across as like the lazy argument, but I feel in a lot of ways that Roku is benefiting from a lot of tailwinds that make it look like a fast swimmer. And it's just kind of floating along, competing against companies who view its business as just part of a larger ecosystem of other services. I think eventually convenience wins. That means that Roku's relationships are probably far less sticky than those of some of its bigger competitors, many of whom are also their frenemies, their content partners.
Rick, specifically, we got news of the trade desk kind of entering the space a bit. Do you have any thoughts on that?
To me, I think it's going to help them. Obviously, the trade desk has big ambitions, but whenever there's a new entrant or anything, it's an opportunity for Roku. But they still have a massive audience that advertisers need to reach, and the trade desk and Roku have been partners before. I don't think this is the end of that partnership.
All right, let's move on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. Rick's a little higher at a 9. Jason's at a 7. Jason, go with the 7.
Yeah, usually when you have successful entrepreneur, founder, CEOs of businesses that have been around for a while and are still growing, you want to give them really high scores. And I want to give Wood the credit. Again, this is a multi-category creator in digital video. He invented the DVR, for goodness sake, and he could have gone the way of the DVR, but he's continued to innovate and kind of know where the future was going to be and be a part of that future. My issue is that Roku went public 7 years ago. This is not a brand new company. It has generated less in its history as a public company. In 7 years, there've been 5 quarters that it's generated more free cash flow than it's paid in stock-based compensation. On a rolling 12-month basis, it's only generated more free cash flow than stock-based compensation twice. Love is vision, but unless you're an insider or an employee of the company, most of the value has been created for those people and not outside shareholders.
All right, so I think Jason's stuck where we were 2 shows ago where we were talking about Wood alternatives. There is no Wood alternative. Anthony Wood is the founder CEO. He deserves his rightful place here. He's caught lightning in a bottle before. As Jason mentioned, yeah, he discovered the DVR and then TiVo did it better, so he didn't really get the full credit at Replay TV. He's making sure Roku doesn't make these same mistakes. Wood's leadership team includes some folks with tech experience as well as a pair of former Fox executives. For a business model that relies on streaming ad revenue for the lion's share of its business, Wood knows that content is king, but tech and agnostic tech is the kingmaker.
Yeah, I love the fact that this isn't his first rodeo and that he didn't win all the rodeos. Let's talk about financials. A 10 is Fortress. A 1 is Yikes. Both of you have a 7. Go ahead, Rick.
Yeah, so popularity has never been a problem for Roku. Even now, their audience has grown by 13% over the past year. The streaming time spent on the platform is up 20%, so you like to see engagement go that way. The size of its active audience and the platform stickiness, they keep growing consistently. This is still a category where the pressure points start to come out, which is why I went with a 7 instead of my higher scores earlier. Roku was profitable once a couple of years ago. It's been in the red for the last 11 quarters. Expanding both its offerings and its geographical reach costs money, but Roku could still be doing a better job about managing its operations. However, adjusted EBITDA and trailing free cash flow has been positive in each of the last 5 quarters, and Roku has a brief lull. They had a brief lull in the top line 2 years ago, when connected TV advertising wasn't at its best, going through a rough patch. But it's been posting double-digit revenue growth for 6 consecutive quarters. I think it's back on track.
Yeah, the only challenge I have when you look at the financials, you look at the operating statement, and yeah, there was definitely that period where we saw the whole ad industry kind of pull back a little bit. That was tough for everybody in that space, the social media companies, all the connected TV companies as well. But looking beyond that, it's also just a product of the constant fight that it's in with the competitors to not just to grow its share, but to maintain that share. It's a constant battle the company faces. And Rick already mentioned the things about the GAAP profitability. I want to give it credit, though. The balance sheet really is a fortress. It's positive cash flows. Looking beyond the dilution and stock-based compensation, it's able to live off of its balance sheet. And that's the most important thing for a company that's growing and still losing money on a GAAP basis. And it has tons of cash, well over $1 billion in cash, so plenty of money to continue to fund the business and fund initiatives. But we're just not seeing it turn into per share value. I hope Rick's right, but so far it just hasn't really happened for investors.
Well, let's see what your stock predictions are, Jason. How well will Roku stock go over the next 5 years? How safe is it? 10 is a sure thing, and 1 is a lottery ticket.
So Roku is lucky. Again, it's not. I think there's a lot of competitive pressures from competitors that don't necessarily have the same incentives around profit that Roku does, that can kind of put pressure on Roku. But the tailwinds are so good. People are streaming so much more than they were watching linear TV even 3 or 4 years ago. And there's still so much growth that's still to happen in that category that is a wonderful opportunity for Roku. But again, because of all the pressures on its business that I see that could put pressure on its bottom line, cause it to have to spend more money to stay innovative, to spend money to market. I don't think it's as safe as other investors. My safety score is a 6. I think its returns could get pressured as well, 5 to 10%, probably on the higher end of that. Again, all of my concerns about looking at, again, this is a business that just went public a couple of years ago. It's been around long enough that it's kind of telling us who it is to a certain extent. And I think those pressures are only going to continue. It's almost like it's shown up for a knife fight with a knife, but everybody else has tanks. Maybe the best outcome, Rick, somebody just needs to acquire it and we can just all move on. It's Peloton, but it's a little bigger niche. Maybe that's too far, but I don't know. That's where I come down on it.
I'm not paying $2,000 for a Roku remote, but beyond that, my 5-year returns is aggressive, better than 15%. Safety score is 7. I'll go with safety first. All of Roku's debt is lease related, so it's really not that it has a lot of long-term debt. And while generating 9-figure free cash flow on a trailing basis, it would be great to see it crank out reported profitability, something that analysts don't see happening until 2026. And not to toss Goliath a bone instead of a stone, but Amazon, Google, Apple, and now Walmart are 4 of the wealthiest companies on the planet. If any one of these competitors really wanted to take out, Roku at no cost, and I don't mean as a buyout, but just as a competitor, they could invest and subsidize to that point. But turning to my ambitious target of better than 15% annualized returns, Roku has only gotten better in 2024, but the stock essentially basically was a year ago. The starting line is respectable here. And while there's always chatter about someone buying it out at a premium in a kind of regulatory environment, wake up and smell the flat screen, Microsoft. The real dream here is to see the next 5 years play out. Advertisers need Roku to reach a growing audience that they can't reach conventionally anymore. And TV manufacturers need to partners that aren't either competitors or in this game only to push their primary businesses. Roku's future is bright. And if you don't see it that way, adjust your brightness setting.
As a Roku shareholder, I can live with Jason being right, but I really hope Rick's right. Let's move on to top it. Jason, is there a company in Roku space you like more?
Yeah, finally something that Rick and I agree on here. I like Disney because Roku is the hardware company that's in the process of becoming the content company, because that's where the real value is going to be for it. Disney is the content company, right? And they've really started to pull the levers correctly around monetizing their business in the best possible ways, starting to kind of get through that donut hole of cable being so important for the ESPN business, to where now over the top, they're starting to monetize ESPN and their sports content in a better way. And that's only going to get better over the next 5 years. So I think Disney is really interesting to me right now. The question, can they find somebody that hasn't already been the CEO like 17 times before to be the CEO for the next decade? That's the question they have to answer.
Yeah, Disney, another 2026 thing to look forward to beyond Roku's profitability is who they get as their next CEO. But yeah, I went with Disney. They're back on track. They have, unlike 2023, where they basically bombed at the box office, they have all of these years' biggest movies in 2024. And specifically to Roku's streaming business, Disney Plus is now profitable, something that most media giants have not been able to crack yet. So yeah, I definitely like Disney here.
Yeah, Disney shareholder too. Love that. Thanks to both Rick and to Jason. They've given Roku an overall score of 7.3 out of 10. That's the exact same score that Rick and Lou gave it months ago. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up, we're going to turn the tables and give FICO a score. Till then, Fool on.